Hello everyone, welcome to the channel. Today I'm going to be going over Wells Fargo, the stock, and what I think of it from an investing perspective, right? So if you're a person looking to trade, if you're a trader, that's awesome, that's cool. Most of the information I will be presenting is more for investing, although you could still learn about the company, the PE, all that. I'm going to be covering all the basics of the stock, not diving too deep into like financials, but we'll be looking at PE and forward PE and stuff like that, but not necessarily like the last 8 earnings statements. Not that there's anything wrong with that. We're just not going to do that today. So first thing I like to do whenever I look at a company, right, for the first time, I'm going to cover this assuming you know almost nothing about Wells Fargo. I like to look at the 1 year specifically performance. 35% is plenty fine, right? The 5 year, 10% is not as fine. And then the all time. And more specifically, I like to look at the 10 years, but also to make sure it isn't like, crash, crater down, right? Generally, I like to avoid that. I like to look for companies that are growing, that are profitable, that have a track record of success, generally. So not that there's anything wrong with some of those things, more the non-profitability, because there's plenty of companies that are great that are growing pre-profitability, but it just makes things more complicated. Anyways, this is not one of those companies. So the biggest concern I have with this, the 5 year isn't great, right? But you have to get the context of it, preferably the 10 year, because maybe I was just looking at Starbucks. I just made a video on it. The 5 year was 10%, but the 6 year was much better because the year before it ran up like 80%. So you have to factor that in, right? But unfortunately, even here, the 10 year, if you bought December 2014, it looks like, on this date exactly, or I don't know, I would assume this just covers that day, but maybe it's just a summary of the month. But either way, you would be dead even, right, outside of dividend, and it does pay a decent dividend, nearly 3%. We'll get into that, but that is it's not a red flag, but it's a yellow flag. Okay, and then we have to understand the context of the sector as well. Let's go down to PE and forward PE first. PE 11%. Forward PE of just under 11, so 11.5 and 11. You may think, wow, this is super cheap. It is cheap, right? This is clearly a cheap stock, certainly for one that's not shrinking. It's not necessarily growing super fast, but it's not shrinking and pays a good dividend, right? Or a decent dividend. For banks, right? They will have much smaller PE than some things, not all, but compared to tech, for sure, compared to even things like retail generally. There's a discount there, even for companies that are growing at least over the last 5 years, over 100%. For example, Morgan Stanley, I know they're not specifically a bank, but they're bank-esque, right? They're in that sort of sphere, right? And therefore PE 17, they've grown 100%. So this is 50% discount towards that, but this isn't like, an Apple, right? Apple-esque at 11%. So it's a different sector. It trades differently, right? One thing I do like to see, beat. That is, I like that. I like that a lot. That is telling me that they're conservative with their estimates. I was just got into this in the last video too, but if you're consistently not hitting your standards, it either means your leadership is either lying to you, right? They're either hoping they hit it, like, oh yeah, we're going to hit this, or they don't understand their company all too well at all, which is also not good. Let's talk about the PE, or the PE, the dividend, excuse me. So if just under 3% dividend, actually it looks like they just hiked it. Actually, that's a pretty substantial hike. So, but I believe the dividend yield is forward looking, so I believe this would encompass this, but I'm not going to do the math here. Either way, it's a decent dividend. It's not like phenomenal. And the reason I say that is for example, Morgan Stanley pays a higher dividend than this, and they have better growth currently. So it is something you could throw into there's multiple different dividend portfolios, right? There's a dividend portfolio near, 6, 7, 8% yields, which are okay. They have their place. And then there's some that are, want to mix some growth in with some dividends around 2 to 4%. Let's say 3 to 4%. I don't know. There's many different ways you can do it. That's what I like, right? Some that give you some growth with a 3 to 4% dividend yield, and then some that are like, just get me the dividends and let me get out of here, right? So this one could maybe fit into the latter. I can see that. I don't hate that, right? However, so my personal opinion on this stock, would I invest in it? I could see myself, right? Would I today? Today, I there's many stocks I like better than some in this sector. I've talked about a lot. I mentioned it 3 times already. Morgan Stanley, right? I did a video on it. If you have no idea, you probably have eyes, right? You could probably check it out yourself, but I prefer that, right? And yeah, you can't put everything in one stock, but if you don't like that sort of thing and you want more of the personal banking side, sure. I mean, we can dive into a bit of what they do. But yeah, diversified banking, investment mortgage, and consumer and commercial finance product services, United States and internationally. So one thing I do like is they are very large, right? Like it's not a small company. So they are absolutely nationwide with 200 billion market cap. I guess a really small tangent. Some people are not a fan of banks because of the whole 2007, 2008. Do not feel like you have to invest in it. You know, there's nothing wrong. You can diversify into other things that similar stocks, similar companies. You know, for example, if you like the dividends, you could go REITs, or you could go utilities, or you could go things, oil maybe, in that space. But I understand some hesitancy for stocks. I think it's a lot more safe, and I don't think we'll see nationwide banks. Regional banks are different. I think we'll see nationwide banks utterly dropping the ball like that anytime soon. But I'm also not super leveraged into banks, and it's just not a concern, right? So what I personally feel, and you can like this for some things. You can like it for just, it has a pretty high floor, right? If the market truly tanks, like truly, like not like, although this really isn't good evidence for it, if the entire market falls, right? But this isn't a stock that you're going to lose. Like if you're in a speculative, non-profitable company, this is going to have a much higher floor than that. Like absolutely. So, and it pays a decent dividend. Like it's not anything, if you're doing it for the dividend, like, oh, this is a great dividend. There's other dividends that are better. But if you want the diversification plus the dividend, like it's not a bad dividend, right? So, and maybe you just like banks and you want to get all the different banks. There's absolutely nothing wrong with that. However, if you're like, I want to diversify into banking, I want a bank or, something similar, that mostly does money management. I just personally feel there's better ones out there. Specifically, I'd point you towards Morgan Stanley, but some of the other ones are fine as well. So that's my personal opinions. Some of the risks, like I said, banks kind of have dropped the ball before. I think just a risk is just there's a ceiling cap on it too. You're never going to have like, oh yeah, Wells Fargo invented quantum computing and now it's up 1,000,000%. And that's pretty rare anyways, but it's a lot more likely for NVIDIA to do that than for Wells Fargo. I don't think that's a surprise to anyone. I don't think anyone's going to be shocked by this. So those are some risks. It's nothing too crazy. Like in terms of banking, I don't see anything with this stock that's particularly higher. So let's see what some people think. So this is a 1-year outlook. They give it a C, a little bit less than 50%. They have it in the bottom 36%. Well, it's 36, so yeah, it'd be the bottom 36%. But they think 65% of stocks will do better over the next year. This is a 1-year outlook. In terms of share price, yes, you have to factor in dividend because there's many around this that pay no dividend. But I would agree in terms of share price in a year. But then again, I don't know what's going to happen in a year. I have no idea. So 3, they have the economic mode is wide, and I would assume that mostly just comes because of how nationwide they are, right? Like my parents use Wells Fargo forever, right? How many people do you know that know Wells Fargo? Is there a Wells Fargo in your town? I would bet there is. There is in almost every town in the United States because it's just a nationwide company. So I actually mostly agree with this here. There's not a whole lot of personal bankers that are just large, like this large. There's a few, but not that many. Neutral. I can't even see the second part of it. I would assume it's neutral avoid. That's neutral long, something like that. So on a scale of 1, 2, 3, 4, they give it a 2. Vinify or refinitive. I thought that said I mixed up the F and the V, but anyways, I don't know what their outlook is. Reiterate since 2020. That shows you how much they look at it, right? They're really changing this a lot. So they've literally held it the exact same for the last 4 years. Okay. MSG or ESG ratings low. Whatever your opinion is on that, you can draw your conclusions. I'm not going to dive into that. Enterprise value 463. So anyways, that's most of the stuff I want to cover in this, just the outline of it. There's definitely worse stocks out there. I'm not currently buying this one just for reasons like that, right? I don't think anyone's going to go up in arms about it. But this isn't like a stock like, oh, top 20 stocks you need to have, or even in the sector. But this isn't going to be a terribly performing stock. It has, I would agree, maybe not this wide, but I hate the 0. To me, this reads 0, 3, 10. But let's just say the 0, 5, 10, right? I would lean more towards the 6, 7 than the 10. Maybe they would too. But yeah, no, it has a good floor, right? It has a very capped ceiling, but it has a good floor. And if you hold this long term, you will not lose money. You will probably make money, certainly over inflation. You're getting the inflation in annual dividends, so any stock performance, which even though it's been sideways, unless you bought at peaks, even over, like I said, if you bought the absolute peak over the last 10 years, you'd still be, even, right? And there's a good chance. So I would be looking, if you really like this stock, you could buy now, maybe DCA in, but I would be, if you like this sort of thing, and it's ran up so recently because of, I should have covered this earlier, because of rates, right? Rates being cut. So it's run up a lot since then. So there's a lot of good entry points here. But as of today, in the year of our Lord, what is this? October 1st, 2024. Is this a stock I'm dying to buy? No. So anyways, that's my personal opinion on it. If you made it this far, there must have been something in this video you liked, or you accidentally left it running. Either way, if you did make it and you're hearing this, my channel is brand new. I would appreciate if you liked and subscribed if you did enjoy the video, and leave a comment or something like that, right? So I appreciate it. Thank you for watching this far. See you guys later.